as we wrap up another week?
Prashant, they're being greedy. The Bulls would take a flat week, no doubt. After the kind of selling that we've seen the last few weeks, and Fridays haven't been very great otherwise. So it's good to see that the first 15 minutes at least, we're building onto those gains. The Nifty Bank has crossed that 40,800 odd mark. So that's looking quite impressive. And the Nifty as well heading to around 17,500 odd. It's a good looking screen, I would say.
Nigel, have you watched the movie Wall Street? The old
Who
one.
hasn't? Who hasn't?
Yeah.
The 80s, the older one, Michael Douglas.
Yeah, we have, Prashant. Yes, we have. How do we convince you we have?
I'm not sure. I know you have,
okay.
but
I'm in the clear.
When you said you're being greedy, I mean that famous
greed
scene.
is good.
Exactly. Gordon Gekko.
Gordon Gekko.
Go on, guys.
All right, guys, we'll bring it right back here to some corporate conversations now. Federal Bank is on our radar today. The bank reported a pretty healthy set of numbers for the third quarter. Return ratios were looking quite strong, slippages declining and asset quality improving sequentially. Ashutosh Khajuria, Executive Director at Federal Bank, joins in to talk about how the business is looking from here on. Mr. Khajuria, thank you very much for joining in. I want to start with the growth question. I think that's what everybody in the market is fixated on. And that's where incrementally, sequentially, we know year on year, credit offtake has been very, very robust. But the question is incrementally, is it slowing down? Now, that's what the system-wide RBI numbers seem to be indicating if you're looking at the way January is shaped up. But you tell us, fourth quarter, because even in the third quarter, I think your Q-on-Q growth was around 4%, the growth in advances. How is the fourth quarter looking and your visibility into the next year?
See, I think when you say the growth rate is slowing down, I think it's because of the base effect. So there has been a sudden surge in credit growth. And it moved to as high as about 17.5% or so, touching 18. From there, because the base now is strong, probably we may not have growth rates of something like, 17, 18% now. It would settle somewhere around 15% plus minus 1 for the system as a whole. And Federal Bank normally has been growing about 200 to 300 basis points higher than the industry's average. So I hope that we would be somewhere between maybe 17, 18% for the year as a whole.
Good morning, Mr. Khajuria. And what about FY24? Mid-teens is what you're guiding for?
Yeah, I think it could be higher teens, if I may say so.
Higher teens?
Maybe high teens.
Okay, all right. Mr. Khajuria, I want to understand which segments are you particularly focusing on? The gold part of your portfolio, I think, is roughly around 12%, or just looking 19,000 crores, I think, on a base of around 1,70,000 odd. Are you looking to, grow that particular segment? If yes, what proportion of the book can it hold? And I ask you this because yields are better and there's big potential out there. We have seen banking names, pull in market share from the unorganized market as well as from the gold financiers. So what's the focus on this particular aspect?
So yes, gold is the focus area, and we have been traditionally good at it. Yield is, as you rightly said, yield comparatively, when you compare it, may not be as high as NBFC's yield of 18-19% or so, but amongst the banks, I think it's a reasonably good yield with least credit cost, and that makes it a very attractive portfolio to grow in. So I think we would continue to grow, but I think to avoid any concentration risk, we may not cross 15% of the total book. I think we will review it when it touches 15% of the book.
Okay, Mr. Khajuria, does this mean that you will have to go outside into new markets, etc., as well, apart from markets we're already present?
Prashant, actually, the bank has been expanding outside Kerala for last 10 years or so. I think way back in 2011, we had about 700 odd branches, and by majority, about 75-80% of these branches were only in Kerala. And now we have more than 1350 branches, and almost 60% branches are outside Kerala. So I think, yes, you're right. We'll have to grow outside the home market where the bank was headquartered at. And it's actually transforming into a national bank. So we are growing in Gujarat. We are growing in Maharashtra. Tamil Nadu is the major market next to Kerala. Then we have Karnataka. We are also in the eastern part of India. And traditionally, bank was present in states like Nagaland, Meghalaya, and all those states, northeast. Because at that time, it was just following the people who used to speak Malayalam. So there were lots of Malayali, priests and all, and educational institutions in Northeast area. So bank also followed them. So like that, I think now it's making its presence felt on the Western India, Western Indian front as well.
What will it do to expenses, Mr. Khajuria, to do all of this, in your opinion?
I think numbers are speaking for themselves. I did not speak anything, see the CI, cost income ratio, right from March 2 to December 23. December 22, which is financial year 23. You would see the trend.
No, but this is the future, right? We're not talking about the past. As you expand into newer markets, and these are well-served markets, right? I mean, anything which is profitable is well-served. So you're fighting for share, which means you have to spend. So hence the question, sir.
Prashant, this financial year, we are going to open approximately, I think nearly 75 branches. And that would be nearly 5% of our base as at the end of March 22. And trust me, all our branches are breaking even, new branches are breaking even in a period shorter than what it used to be earlier. Earlier, I think in, so-called unbanked areas also, it used to take 3 years to break even. In urban areas, it used to take 18 months to break even. Now we have some of the branches which are breaking even in less than 1 year. So I think cost income ratio would not be adversely impacted by expansion, and we are very wary of that. So I think growth would be that number of branches would be increasing, but while containing the cost.
Okay, striking a very confident note there, Mr. Khajuria. Let me come to margins now. I believe you even in your analyst call, which happened just a few days back, you spoke about how the bank wants to focus more on high-yielding assets. So can you first of all elaborate on that statement, how exactly you're going to do it? And just an overview on net interest margins, given that I guess deposit repricing would still be an ongoing phenomena. How should we look at NIMs for the next couple of months?
Surabhi, traditionally, bank has been more into secured assets. We hardly had any unsecured book. Practically none, barring some AAA corporates or so, where only short-term unsecured loans were being given. But that was the only area we had actually ventured into. About 5-6 years back, we started personal loans. Now we have launched about 1.5 years back. We launched our credit card as well, and I think that portfolio also is now gradually picking up. But whatever said and done, whatever we say, on the unsecured side, it still would be a smaller part because the base was negligible, and on that base, even if we grow at 100, 150, 200% in a year, that would not be very material in terms of the numbers. But that certainly gives kicker, and these are the high yield areas like your credit cards, CVC, commercial vehicles, and construction equipments. Then you have
so
MSME,
how much will you grow
business
it to?
banking. Bank has been
Got it, sir. How much will you grow it to, sir? I'm so sorry, I'm butting in because I'm trying to squeeze in more questions, paucity of time. How much will you grow your unsecured book to? I get the rationale. You want to go for high-yielding assets.
Surabhi, it could be a challenge for larger banks who have a very large base, and growing on that at double-digit numbers is a challenge. But a bank which is presently about 1 and 1.30, say 130 basis points market share and all, it's not difficult for us to grow at what the number I had told you, the loan book growing at about, say, higher teens, 16 to 18%, or a particular segment growing at 40-50% or 100%. So it's not going to be a challenge for us. So base also plays its role.
Right, Mr.
We are gaining market share, and that would continue to happen.
Yeah, but could you give us an NIM number, sir? I think it was closer around 3.5% odd. That could taper off a little bit from there. But what should we work with, sir?
I think traditionally we have been between 3 and 3.25. Now we have moved in the slightly higher category, 325 to 350 range. So it has definitely edged up by about 25 basis points vis-a-vis last.
We can work in that range of around 3.25 to 3.5 from here on as well.
335 to 340 would be reasonable.
Lovely. And also your net worth, you're looking at doubling it in the next 3 years, right? How much of that will be because of profit? How much of that will be because of fundraise?
I think it would be probably half-half. So right now our net worth is about 80 19,000 crores or so. And till 9 months, first 9 months, the profits are 2,100 crores. Now you can project yourself. I don't want to give any guidance on profit numbers, but for 9 months, the numbers were 2,100 plus. And then you can guess for next 3 years what could be the profit number. At best, even if 20% is payout through dividends and all that, 80% would be retained. So I think on that, these are very approximate numbers. And for further, micro numbers, you can contact our CFO. He would give you a better picture.
So we've got the picture. The net worth doubles in the next 3 years, and half of that will be from profitability, and some part of that will be from fundraise, right?
Yes, yes.
Okay, it's been good speaking to you, sir. Thanks so much for joining in and giving us all those details. Wishing you all the best in the way ahead. Well, for the time being, though, we'll slip into a short break. When you come back, we'll be joined by a couple of other management. Nazara Tech will be joining in to tell us about the business outlook going ahead, and we'll also be joined